over the world. So I'm very excited to welcome us all to the final webinar. Next slide, please. To welcome us all to the final webinar of this knowledge exchange series on disaster risk finance solutions for climate resilient livelihoods in the agriculture sector. We've been on a very interesting learning journey all the way from index-based livestock insurance back in June to climate responsive financial services that we covered in August. In September, we looked at meso-level solutions, index-based insurance and credit solutions. And finally, we're looking at advances in technology and how they're being leveraged by fintechs and agtechs to serve this community. Next slide, please. Want to remind everybody that you are just one more step away from earning your completion certificate. You have access to a total of 4 fact sheets, including all the recordings from the webinars, the PowerPoint presentation, and knowledge from a breadth of guest speakers ranging from public to private to development sector. Please interact with us throughout the session. We will have a panel of speakers followed by a Q&A after that. You're very welcome to post questions and comments on the chat as the session goes. Please look out for a post-event email that we will send next week with the link to the quiz. Complete that short quiz and earn your completion certificate. One more detail in housekeeping. I just want to profusely apologize that one of our speakers, Shoba Shetty, will not be able to join us this morning, but I will give an overview of her presentation and will circulate it together with the rest of the presentation. We've covered the interesting case of that she was going to share on the 1 Million Farmer Program in the fact sheet, so do look out for that. That's it for housekeeping. I am very honored to welcome Jean Perm, the Global Director for Finance, Competitiveness and Innovation here at the World Bank, to give us introductory remarks. Over to you, Jean.
Thank you very much. Good morning, good afternoon, everybody. Thank you very much for having me to give some opening remarks to this series of webinars on a very important topic for us, and the one that is getting even more attention at the World Bank, which is around also financial resilience and the link between the impact of climate shocks, and in particular for rural population, and what are the financial instruments and elements of response to that. So very much appreciated. I'm going to step back a little bit and put that also in the context of the broader discussion on financial inclusion, and in particular the targeting of financial inclusion efforts toward rural area and smallholder farmers. So where do we start from? So what we see is that the current level of financial inclusion of smallholder farmers, including the use of payment services, savings, access to credit and insurance, remains very low, despite a lot of efforts at the national level to increase financial inclusion and the availability of micro-level products targeting farmers. So if you look at the latest Findex data, from an average of 57 developing countries in the latest Findex 2021 that have a breakdown by rural versus urban as a proxy, over half, 54%, of rural adults still do not have simple transaction account, and there remains a 12% percentage point gap with urban population. So very significant urban-rural delta. And when you look at agriculture insurance that has been available for decades, we see that more than 60% of the country with agriculture insurance program provide premium subsidies that are estimated at 22.3 billion for the top 10 countries in 2019-2020, with the majority being provided for micro-level programs. So from a total of 41 insurance programs with premium subsidy in Asia, 71% were micro-level. And to date, only 3% of the 48 million smallholder farmers in Africa are insured. So we have a real gap there, and we need to focus on that. What we see also is that farmers have limited access to formal finance due to various demand-side issues, such as lack of collateral to secure financing, low profitable and subsistence production, and weak market linkages. But there are also supply-side issues, where financial service providers lack data to appropriately assess credit application as well as the climate risk and on climate risk, so that would allow them to provide custom-made solutions. So we need to work both on no, I don't have a presentation. I just have talking points. So please don't look for the presentation. Sorry about this. So first message, we have a gap and we need to find a way to push a customized solution and also aim both on the supply and demand side. Now, we see also that smallholder agricultural producers face numerous other challenges, which often compound to result in food insecurity, extreme poverty, and are also associated with higher rates of mental illness among farmers. The three messages: the low level of productivity due to high labor intensity, low adoption of high-quality inputs and improved technology, as well as limited access to market. They are also facing extreme weather events due to climate change, which further reduces productivity and create chronic food insecurity and trap households in extreme poverty. So there's a very strong link between financial inclusion, the provision of better customized financial services, and fighting extreme poverty. And when we look at a range of studies from around the world, they have documented significantly higher rate of depression, anxiety, and suicide among farmers than the general population. A 2012 study in Australia found that an increase in drought index increased the relative risk of suicide by 15% in rural maize, and a 2018 study of smallholder farmers in northern Ghana found that the impact of climate change on farmers' emotional regulation practices was likely to predispose them to mental health problems later in their lives. Sorry for my voice. I'm a bit sick, so my voice is failing me. So it's also for the well-being of these farmers that we need to do more. Meanwhile, there's been a very notable expansion of Fintech and Agritech, which are digital companies and businesses that aim to increase productivity, profitability, and access to services and markets in the agricultural sector for smallholder farmers. So this is a general message that came out of the last Findex. Digital financial services and digitalization of economy are really helping close the gap. And this is a discussion that we also need to have when it comes to smallholder farmers. So COVID-19 pandemic accelerated the adoption of digital technology and innovative solutions across all sectors, including in the financial sector and in the agricultural sector. Adoption was also supported by increased public investment on internet connectivity. And finally, consumers adopted digital payments and e-commerce across both developed and emerging markets. So the result in terms of financial inclusion and financial protection is that agri and fintech are reaching the unbanked and underbanked by acting as digital financial services provider or linking farmers to conventional financial service providers for both credit and saving products, insurance, and other innovative financial services. So let me give you a couple of examples of this kind of impact also as a way to try to provide example of what has worked and not worked and could be replicated. In Kenya, a company called Apollo Agriculture more than doubled lending from about 11.3 million and 80,000 farmers in 2022 to 26.5 million, corresponding to 200,000 borrowers in 2023. So very significant increase just in 1 year. Across East Africa, Africa has insured over 1,700,000 with over 180 million in insurance covered against a variety of weather risks. So again, the ability to diversify and reach further than before. Overall, farmers report improved resilience. 71% of the farmers served by Agritech and Fintech, supported through World Bank operation led by our colleagues from the Global Practices, reported that they were able to recover from climate shocks. 76% of households increased savings and reduced borrowing from household consumption by 15%. So better use of the financial resources and increased resilience. And the same World Bank project is also supporting agri-agriculture and Africa. And the project aims to consolidate data and digital investment across the World Bank 800 million agricultural lending portfolio. We are trying to support establishing partnership between country, government, and Agritech, providing co-funding, incubation, and acceleration support to Agritech and Fintech. So really supporting the emergence of new players and disruptors. In Indonesia, Crowdy, an agri-tech supported by IFC, the private sector arm of the World Bank Group, is on its side using flexible guarantees and collateral and has been able to mobilize through their crowdfunding model, lending of over 61 million since 2017. So again, a lot of innovation, but also leveraging the private sector. Now, a couple of lessons to be learned out of this is that there remains a very strong role for the public sector in creating a more conducive environment and for the development in facilitating learning and investment in public goods. So we need to work on the enabling environment, on the foundations. So that means public investment in internet connectivity, financial sector and data infrastructure, as well as financial and digital literacy, which is what the World Bank Group is advancing through its digital development and finance competitiveness and innovation work. Policies and incentives to promote financing and innovation, and globally the leading agritech and fintech market, including Israel, Netherlands, China, India, and Indonesia, are really primarily driven by better enabling innovation, including lower capital requirement. So this is something on which we are very much focusing and dedicated to our client countries. And we are also using our learning program and platform for knowledge exchange as what we are doing today, as well as the disaster risk finance community of practice, are really fundamental to facilitate continued learning. And that's why we are very keen to continue to organize events like the ones you are participating in. So thank you very much. Thank you very much for the opportunity to join me in this morning, and back to you for the rest of the program.
Thank you so much, Jean, for very comprehensive remarks, really framing the challenge and the significance of this learning webinar and series. So we're very excited to have you and to reflect on the global experience by the bank and what we're learning. Thank you. Next slide, please. Right. I'm very delighted to just, again, present the challenge of why we're doing this and a very quick overview of the agritech and fintech space. I will very quickly touch briefly on some of the slides that were prepared by the third speaker, who I explained earlier will not be able to join us today, before I hand over to our invited panel of speakers. Next slide, please. So really the central question is the remaining challenges on scaling up micro-level agriculture insurance, especially targeting smallholder farmers to increase their financial resilience in the face of climate change. We are seeing a lot of studies that continue to show challenges to scaling up that affect the supply side, that present obstacles to the supply of insurance, as well as those that constrain demand. And to better analyze this, or to understand this, we really think of it in a framework touching on affordability or price. So far, we see that the pure risk, the data required to assess risk critically and to provide the solution still results in very high cost of insurance, which then means it's not very affordable to farmers. This compounded with issues of basis risk further lower the value of insurance. We see challenges related to accessibility. So on the supply side, distribution channels to reach large groups of geographically displaced farmers are very hard. The cost of reaching this last mile is still quite high. However, as we'll learn today, we are seeing some agtech and fintech solutions that are plugging into the space and lowering the costs. We also see that on the demand side, just access to providers by farmers is seasonal, and this compounds issues of trust that further compress demand. And overall, the customer experience, when you combine these factors on the product design and how it's delivered, and how in some cases it's not adequately tailored to the needs of farmers, results on the demand side, some of the customers' expectations not being met. So there is a lot of information on this that we've provided in the fact sheet. Next slide, please. And as we said, we are seeing agtech and fintech ecosystem solutions coming to plug the gap. And when we look at the global experience, there are a few positive outliers. And as you'll see here, there are common features or common drivers in this market as to why we're seeing agtech and fintech growing so much. If you look across these countries from Israel all the way to Indonesia, we're seeing public support, development support for fintechs, for innovation through various interventions like digital technology challenges, like funds for innovation, incubators and accelerators. We are seeing some countries tapping into the youth community and universities to innovate and come up with solutions in the digital space. In India, very interesting case of the ID program and how that's really enabled a range of fintech services. In Kenya, to highlight a very recent AgTech FinTech challenge, which resulted in the 1 million farmer platform that we'll touch on a little later today. So very interesting experience and a strong role to play by the public sector. Next slide, please. And what we see, of course, is a lot of these digital financial services initially specialized in one form of service or need. However, we're increasingly seeing these players becoming multifunctional and serving a range of needs that farmers face, all the way through from financial inclusion, which is both payment services, savings, credit, and insurance. So not just insurance, because as we've learned throughout the series, that is inadequate at meeting the range of needs that farmers have. We're seeing players also enable market linkages, both backwards and forwards, providing production information and advisory services, as well as analytics. And as you'll see in the bottom there, we've highlighted some interesting cases of success and impact. There's more of this in the fact sheet. Next slide, please. Again, Shoba is unable to join us, but I will quickly touch on this. I just wanted to flag some of the reasoning behind the 1 million farmer platform and how it emerged. Next slide, please. So really the challenge emerged because of the need to improve productivity of small-scale farmers. The World Bank had already been running a relatively large agriculture lending portfolio, about $850 million across 4 programs. So there was a strong public sector program already in place. And the innovation was to provide a private sector-driven approach to bring all of these investments in data, in digital technology, into one place that would enable a larger community of farmers to benefit from the services and solutions that these players were already providing. Next slide, please. We'll show on the how this touched. Next slide, please. The how really consisted of creating a platform to allow various programs to plug in and reach a large scale of farmers. Next slide. And as you'll see here, the range of financial AgTech and FinTech providers that have been able to be connected onto the platform or onboarded onto the platform, emerging from a launch that was done in 2019, an innovation challenge in 2019, where startups were allowed to pitch and were match-made to various county governments and challenged to provide solutions. Overall, there are about 27 of these AgTech startups that have been providing solutions since 2019, and over 400,000 farmers have already been reached. And the project is progressing strongly to meet its 1 million farmer target. Next slide, please. Next slide. The slide demonstrates the matchmaking exercise that has been undergone. The program has continued to provide intensive technical assistance at multiple levels within government, within county governments, and the AgTech, Digitech community itself. And this has been done through mobilizing a range of partners, as you'll see in the next slide, please, that have provided a range of services, including the analytics, co-funding, as well as incubation and training and business support. Please look out for the fact sheet that will have more details on this interesting case, including what we highlight in the next slide, some of the high-level results and impacts of the program that we're seeing, how it's impacting on risk preparedness on farmers, a study that was done following up farmers that are already on this platform to understand their experience has really found strong impact in terms of improvements in farmers' productivity levels. We found evidence of more families or households being able to increase their savings, being able to reduce reliance on borrowing in the impact of shock. Farmers are are reporting that they've been able to access new types of financial products and services that they were not previously able to access. We're seeing results of improvements in their earnings, still from the same hectarage of production, which is really quite impressive given the emerging technologies on climate smart and precision agriculture. Overall, farmers are reporting improvements in their quality of life, and about 90% of the farmers that we surveyed through this assessment reported overall improvements in quality of life, really stemming from the increase in income that they're realizing from their operations and how they're able to meet more of their family needs. And where we get excited the most is really on whether farmers have been able to respond when there were shocks. And we're seeing that indeed this is starting to happen. About 71% of the farmers that were surveyed from this program reported that they were able to recover from climate shocks as a result of these services from Agtech and Fintech, and overall well-being is reported to be increasing. So very exciting results coming out of some of the work that Agtech and Fintech solutions are providing. That's why we're excited to be putting together this webinar and sharing these lessons learned. I'll stop here and hand over now to our next speaker. Our next speaker is Roman, co-founder and CEO of Agro Insurance International, who's kindly joining us from Sydney today. So very late his time, and thank you so much, Roman. Roman is an experienced agriculture, insurance, and risk management professional with over 2 decades of experience in consulting and the private sector. He has developed a number of named peril as well as multi-peril comprehensive insurance programs, as well as area yield and weather index insurance programs for both crop and livestock. He has vast experience from a range of countries, including high-income countries like Australia, New Zealand, middle-income countries like Grenada, Philippines, etc. So please allow me to welcome Roman. Over to you, Roman.
Well, Caroline, it's a long presentation for me. Thank you so much. Okay, I will be talking about my experience as the agriculture insurance person. As the portfolio manager, I worked for several insurance companies, and I was doing the product design, program managers myself, and I managed underwriting teams. So I have some kind of a view of what is going on, what challenges we have, and what we probably need to do in the future. Can we have this next slide, please? Okay, so I think that right now we are living in a very good time. So when I remember when I was starting my agriculture insurance career, most of the data was either in a paper form, hard copy, or you had to hunt it in internet, whatever, and you still couldn't find a lot of it. But right now we have new technologies, and this includes the satellite remote sensing, optical satellites, synthetic radars, which provide different type of information that we can use. We already have the weather data from weather stations, automatic weather stations, ground-based official weather stations that report weather data according to the WMO protocols. And also we have a bunch of different weather data sets, which are analytical data sets, which have been developed by different companies. And at the present time, I think that we have 27 different weather data sets with the data for about 30 to 40 years. Which is really fantastic. If we don't have the weather data from the official weather service, we can use the analytical weather data sets, which is great. Also, right now, the drones become very instrumental. They're very helpful, and we can use them for underwriting and for loss adjustment, loss assessment. And I also find very interesting applications of GIS software. I know that many people still don't understand what is GIS, how we can use it. But at the same time, we use Google Maps, we use Apple Maps, and we know about the Google Earth software, which is free of charge for everybody. And if we can get the GPS location or address location of our risks for our insured farmers, we can get a lot of information. I will show it a bit later. Also, the new technologies provide us with very useful functionalities. Right now, a lot of companies are working on the crop type identification based on satellite imagery, which is fantastic. It's still not very accurate, but at least it's something that we can use for agriculture insurance purposes. We can establish, or we can recognize the crop emergence. We can monitor the crop condition during the vegetation cycle. And I personally use the satellite remote sensing data just to understand what kind of a crop condition we are dealing with at this farm or that farm, or specifically even the fields. And this is very good. We also can use the drones and satellite data for identifying the crop damage after risk events. And right now it's still challenging, but a lot of companies are working on crop yield estimation based on the satellite data. I think that we are facing probably the next 5, 7, maybe 10 years, but very soon we will need to send the people in the field, and the satellites and drones will help us to assess yield precisely, very accurately, which we can use for insurance purposes. Next slide, please. So at this slide, I would like to show my personal kind of experience. To the left, you can see the field before the risk event. And to the right, you see the imagery, the crop condition after the risk event. Using these two images, I was able to identify with my team, with my underwriters, that some of the fields, I don't know if you see the cursor, the arrow moving. Can you? Kalala? No, okay. Anyhow, so you can see that some fields, even before the risk event, were not doing right. And when we checked this with the farmer, it appeared that the farmer declared that all of his fields were irrigated, but in reality, it happened that his cotton fields were not irrigated, some of them. So this helped us to make the crop assessment much more accurate, and it resulted in the savings of $2.4 million Australian dollars due to accurate claim assessment, which was positive for the premium rating purposes, for the future purposes. Next slide, please. Another solution that I used in my work is another platform provided by the commercial technology companies, which gave me a very good opportunity to assess the climate weather condition at the fields, and also to compare the crop condition to the previous years. At this slide, you see the example from Serbia, where we had a project and we were working with the apple orchards. And here you see that we managed to get the precipitation data from the satellites for different agronomic zones, and I could get very good idea if the location was having very good rainfall, or there was a drought developing, or excess rainfall. But what is very important, I also could compare the NDVI index, which is the reflection of the crop condition, with the previous years. And also I could also see the situation where the precipitation at the specific orchard comparing to the previous year. At this slide, you see that we used the years 22, 21, 19, 18, 16, but for underwriting and loss assessment purposes, we could use all of these years, which was 10 previous years. And this is the huge, vast database of the weather, where we could see that, let's say, in 2022, the cumulative precipitation was not very good comparing to the previous years, as you see here at the top chart. But at the same time, at the lower chart with NDVI index, we see that there's been some problems in January, but this is not very critical for orchards. And throughout the season, the crop was behaving nearly the same as the other comparatively years. So which is a real good information for underwriters and loss assessors. And I would tell you that this information is practically available for any location on Earth where we grow crops. Next slide, please. Another example is probably not very positive. There's been a very good initiative by the company SARMEP, supported by developing organizations, which was developing a solution for monitoring a rice crop in the Southeast Asia. At this slide, you see the application of this platform Prism for the Philippines, where any user, and this is the open source, open to public platform, you could see the rice area, the yield, the planting dates, the seasonality of rice crop throughout the Philippines. But the problem is that, first of all, the cost of data and cost of service is a bit of too expensive for local insurers in the Southeast Asia, and it has limited functionality. You can use this platform for understanding the crop condition, but it is not very useful for crop insurance purposes because it gives you only indication for the region, but not for specific areas and not for specific fields. So this is really kind of some platform that we can use properly in the future, or similar solutions, but it's not addressing the specific insurance needs that insurance companies need to use to make the insurance products more affordable and more efficient for the farmers. Next slide, please. Oh, this is a very good example. So our company, we had an assignment with the reinsurer and the local insurer in Azerbaijan, and we had to assess the maize fields, and it was a very big client. I think it was more than 10,000 hectares. So we had to spend a lot of time to do the pre-acceptance inspection for insurance purposes. But what we decided to do is to use the satellite image, which is to the right. And you see that from the satellite, most of the fields are irrigated, but we still have some patches, some gaps, some problems with the crops. So the crop standing is not even, the crop condition at each field is a bit of varying. So we already identified some issues using the satellite imagery. But when our team came to the fields and put the drones, and we already knew which fields to go, where to put drones, where to look at, we managed to identify some problems at the fields, as you can see at the image to the left. The main problem there was the production practice and salinity of soil. So the customer who wanted to insure this cornfields, they had to do something to mitigate high salinity of the soils and to achieve good establishment of crop from the start of the season to be able to insure these fields. Next slide, please. Yeah, and I would like to say that in the previous slide, the drones and satellites, they helped us to save about 30% of our time, which was required for pre-acceptance survey. Another example is the maps that we can develop using the drones. This is the image from another company that we partner with. And this company develops the flight tasks for drones, and then the drones do assignment automatically. What you can see is the map where the drone identifies several areas, homogeneous, and you already get some very good understanding what's the area, what's the hectareage, and how different is the crop standing. But what is also very important, you can calculate the number of plants per square meter and per hectare using drone technologies. This is especially important for high-value crops and for perennial plantings like coconut plants or nutmeg trees in Grenada, coconut palms in Philippines, coffee plants and whatever, because when we ensure the high-value crops, which have a long time of life, we need to know the number of trees, like apple trees or apricot trees or whatever. And drones can calculate the number of trees automatically without us to go to the orchard and to do calculations ourselves. I did it myself riding the car through the almond orchard. And this is really hard work because you need to be accurate. You need to calculate every tree standing. And sometimes you make mistakes. Drone do all of the work for yourself. And this is fantastic for the present. It will be even better in the future. Next slide, please. Another example was very interesting this year. I was on a mission in Guyana, which is a quite interesting country. And when I was talking to the banks, and the banks do provide credit loans to the farmers, It's not very extensive, but still they have like 500 customers, 2,000 customers. And when I ask them about the use of new technologies, especially the digital maps, if they do underwriting using the GIS software, and they said, oh, well, we don't have good maps at all. Guyana is really underdeveloped, whatever. And I said, well, guys, it's not right. You need to look what is present. When I came to the hotel the same day, just in 5 minutes, I managed to map these 4 fields as you see at this slide. And even here, using the Google Earth, you already can get a lot of information, which is very valuable for underwriting. Like for the field that is seen here, you see that this field is only 2.3 kilometers from the ocean shore. So this field is prone to the storm surge. It can be flooded by the salt water, and the crop actually can be damaged by salt water. The other fields that have different proximity to the villages, and insurance know that the closer you are to the village or to the city, the higher fire hazard you have. And you also can see the altitude of your field. If it is below the sea level, definitely if it is a big storm, then this field can be flooded. If it is more than 2 or 3 or 5 meters, it probably has a less chance of being flooded by the seawater. And this we can see even without any subscriptions, any paid software. We can use the Google Earth software, which is open to everybody. And I think this is very helpful, even if you don't have budget for new technologies. Next slide, please. So here, I think that another options that we can see, during the last 20 years, area yield index insurance was a bit struggling. We know only several examples of programs established in the international practice. It's very minor in the USA, in Canada. It's a bit extensive in India, but it struggles because the key problem with the area yield index is the accurate estimation of yield close to the harvest time. You need to do a lot of crop cutting experiments, as they call it in India, and you need a lot of people, a lot of manpower, a lot of resources to do this job at the same time. We think that the new technologies, especially the satellite data, can be used to estimate the area yield in the given year. For this, we need to get the crop type identification. We need an accurate yield estimation. The best would be probably 95%, but I would agree that even probably 90% accuracy comparing to the field test would be acceptable by the insurance companies. And what is also important, we need to understand what was happening at the given field in the previous year, which was planted with the same crop. So at this slide, you see that there are several challenges with the technologies, and I myself had this challenge. So once I had a big claim in Victoria State in Australia, and it was a kind of a partial loss of the cereal crop. And we hoped that we will be able to use the satellite data to assess the crop, but we couldn't get the satellite data, satellite imagery for 3 weeks because it was a dense cloud cover, plus there was a lot of bushfires, and the air was filtered with all of the smoke and sediments and whatever. So it happened that in this specific time, we couldn't use satellite data because we couldn't get any imagery. So the technology must be either cloud-free, or we need to have the plan B. Either we use a different satellite technology like synthetic radar imagery, and we need to know how to interpret it, or if you don't have the satellite data, we need to be able to send the people, the experienced loss adjusters, to assess loss in the field if satellite technology doesn't help. Also, a big challenge, especially for the countries in the equator and what we see in Southeast Asia, where we work right now, that many farmers, they have different harvest times, ripening dates, just due to different varieties, different production practices, planting decisions. And this is really difficult to input in the crop type identification, yield estimation. But I'm really positive, and I think that within the next 5 to 7 years, we will be able to overcome these challenges, and we will have algorithms how to overcome these things. So the images here, they give you a very good example, like the top one, it gives you the map of different crop types and the estimated yields. They are not very acceptable for the insurance, but at least they give you a very good indication of what the crop yield might be. And I find this myself, and for the loss adjusters, a very valuable information when you go to the field. You already know what's happening in the region. Next slide, please. So lessons learned. The new technologies, they gave us a choice of different data. We actually get the access to historical data sets for the countries where data is challenges. As I said you before, I told you before, right now, practically for any location in the world, we can get weather data at least for the last 10 years or 15 years. Maybe it is not the actual data, maybe it is the synthetic, reanalyzed, kind of a calculated data, but at least this is something. And we already can make our premium rating decisions and risk assessment decisions based on these data. Right now, we get access to near real-time actual data, weather data, vegetation indices. I think that it's over-optimistic when the people say, oh, well, we have the actual satellite data. We never get it because before the signal comes to the processing center, it takes a bit of time to process in the signal. It takes some time to analyze, to interpret the data. So we actually get the data from the satellite observations, probably with a time lag of 2 to 4 hours. But this is not bad. This is much better than what we used before. So this is still real good. So from my experience, the satellites and drone data, they give us better opportunities for much more accurate risk assessment. It gives us additional data for risk analysis and premium rate setting, and especially for the claim cycle, for the payouts. Our loss adjusters can do the work quicker and accurate, or sometimes if we identify the total loss cases, we can do the payouts even without sending loss adjusters to the field. Another application is very interesting as the hybrid insurance, because right now a lot of companies, a lot of countries, they try index insurance, but there are a lot of cases when the farmers have disputes because they do not get payouts because of the index structure, but they actually got claims, they actually got the crop loss because something happened on their field. In this case, there is a very good option for hybrid insurance, and satellite data will tell us that even if the index structure doesn't validate the claim, the satellite data will tell us that there is some problem in this field. And maybe if we have the hybrid solution, then this can work in the benefit of the farmer. Because as an insurance person, I can tell you, the worst situation ever is when you have a contract with your customer, the customer has a claim, but you cannot pay the claim because the terms of contract prevent it, which is especially happening with the index structures. And this is the worst case, really. That's what I tell you. So another thing, what is very interesting, insurance companies, they already introduced a lot of front-end solutions just to enhance distribution, some kind of a sales application, farmers communicate with the insurance company, but these are only the marketing tools or contract processing or management tools. They really do not have any relation to underwriting and loss assessment, which are the key fundamental stages of the insurance product. And this is what we need to do in the future. And also, I've seen a lot of different platforms and solutions during the last couple of years, maybe 40 of them or whatever. But the key thing that many new technology solutions lack is lack of reporting. Reports, analytical reports that will help the underwriters and loss adjusters to make decision very quickly in 10-15 minutes, and which will be useful for filing purposes. Because in insurance, if I make an underwriting decision, I need to put some data in underwriting file, because when it is a big claim, the auditing commission may come and they will need to assess why I did this underwriting decision, why I signed this risk, why I agreed as the chief underwriter to insure this risk. And if I have all of the relevant data, including satellite or drone data, this data need to be 100% proof that my decision was correct. So this is something that we will need to decide. And this is especially important for loss adjustment. Next slide, please. So the key requirements for the satellite data, especially because this is probably the most promising technology for the future. First of all, there need to be seamless data with as short as possible revisit schedule. Several years ago, I was using different satellite data, but when you have the revisit date of 7 days, 8 days, like you cannot get a satellite image or satellite data more often than 7 days, this is not good, because sometimes you may have a claim, the farmer will decide to plow down the field, and if the satellite comes after that, you cannot use this data. So we need to have at least 2-3 days revisit schedule. Right now, several satellite operators, they even provide satellite data on a daily basis, daily revisit, which is a real good progress right now. I would like to see the automatic data interpretation and provision of specific crop condition, crop loss data for claim calculation or crop assessment. This will be a great help to loss assessment. And it doesn't matter if it is indemnity insurance or industry insurance. This will be a real good thing. Also, we need to calibrate satellite data to increase the accuracy of crop yield estimation. And I don't know if this can be done other side if we use the in-field calibration, in-field yield assessment. So we need to send people to the fields every year, at least 50 fields or 25 fields, maybe 100 fields. We need to collect the ground-based data and then to calibrate with the satellite data, because there may be different conditions, different sensors, different satellites. All of this need to be done. But I'm sure that in 5 years or whatever, we will be able to assess crop yield and especially crop condition using the satellites very, very accurately. Also, affordable pricing for satellite data. I do remember times 20 years ago when one satellite image was costing $100, $200 per hectare. Right now, the price is much less, but I hope that we will get even more affordable pricing, especially now when the satellite operators will have the daily revisits. So the data cost for them will be much, much lower. And if we can get it much below $1, this will be good data that can be used not only in the developed countries, but also in developing countries in Africa, Southeast Asia, Latin America, whenever. So this is something that I would like to see. And also, when we talk about the platforms based on new technologies, I would like to see the flexibility when the developers of platforms can adjust solutions or products to meet the specific requirements of the insurers. Because frankly speaking, right now, the technology companies, they do the science and technology, and they have no understanding how insurance processes work. And I think this is the key impediment to the adoption of new technologies by insurance companies. It doesn't matter if it is Germany or Austria or India or Philippines or Ghana or whatever. This is the main impediment. Next slide, please. So again, the key challenges are cost of technology, the functionality, accuracy. So insurers usually for name peril operate with the deductibles of 10%, 5%, 15%. So if the measurement accuracy will be around 90%, so then this will be applicable and useful for insurance. We also need automatic analytical reporting that will help loss assessors and underwriters to make decisions in a very short period of time. Data availability, the drones. Actually, with drones, it's quite interesting. Everybody is a bit agitated. Okay, let's have drones, whatever. But in my practice, there are several things that we need to keep in mind. First of all, there may be attacks of predatory birds, and you can lose your drone. You can lose your drone because of GPS signal loss or whatever. We had several cases when the drone just flies away, $2,000 or $3,000 just disappears somewhere in the ocean or whatever, and you cannot recover it. This is a big loss. Or sometimes the drones just cannot start off. We had these cases in Australia when we had to assess the fire damage to forestry plantations. And that was a bit frustrating because you're coming to the loss assessment inspection. You have your drone, you have your batteries, you have the professional operator of drones, but drone doesn't just start. So we need to know what plan B can be, and how we can mitigate these issues. Technical capacity of the insurance companies is also a big problem. Right now, if you look at insurance companies, even in Western Europe, you will see that rarely you will see a team of new tech people who are working for agriculture insurance. They may be working for property insurance, for high-risk solutions, for special risk solutions, but it's very seldom that you will see people who understand how to use new technologies for agricultural purposes. And this is something that will need to be mitigated in the future. So what are the possible solutions? First of all, and I did it myself, training and education. We need to train the underwriters. We need to train the loss assessors. We need to show them how to use new technologies. We need to teach them how to interpret the data that you get from the satellite and from drones, from GIS software, because many people simply don't understand that technology is already here. You just get information, but if you don't know how to interpret it, you cannot use it. So this is something that is really important, training and education. So special teams, I said, and we need to just have some new technology implementation plans within the insurance companies or partnerships for the countries that implement the agriculture insurance programs. Next slide, please. So the roles of the public and development sectors. So we need to understand the situation. We need to do the situation analysis and develop the plan for introduction of new technologies. We also need to understand the needs of insurance companies because, like, okay, we will buy some data from Planet or from some Sentinel or free access to Sentinel data. But what does this mean? You can have petabytes of data, but if you don't know how to use it, if you don't have the solution how to process this data, it will be useless. So you need not only to obtain the data, you need to know, you need to have the plan, how to train your people, how to obtain this data, how to store it, and how to interpret it and how to use it for the purposes of agriculture insurance. So another thing that is things which are very important. We need to replicate success stories. This is something partially that I'm talking to you today, because I've been using new technologies for phone insurance, for almond insurance, for loss assessment, for total loss cases, because sometimes if you can look at from the sky using the satellite and you see that the field is totally damaged, there is nothing left. Why do you need to send a person? You can make a payout just using the satellite imagery. There are regulatory requirements that when you form the claim file, you need to provide some evidence that this is the objective damage and you have the kind of a supporting information that there's been a total loss for the crop. Satellites right now, or drones, they can provide this data. We don't need to spend hours at the field. If you can look at this field from the sky, then it's you use the report from the satellite, the imagery, you put some underwriting or loss adjustment notes, you put it in the claims file. This is the proof why you make the clause. We actually did it in Australia and New Zealand in several years, like 2016, 2018, when we had very severe events, and we really understood that we don't need to visit every field. We just take a declaration of the farmers, we use the satellite data, and that's it. We pay money to the farmer. Everybody was happy. Also, we need to have the critical analysis and mistakes, because as I told you, the worst situation, if the farmer has a loss, the crop is lost and there is no payout. Especially this is true about the index insurance structures. In this case, I think that the hybrid structures, which combine the indemnity insurance and index insurance, and also using the new technologies, will be a much better solution, because then, even if there is no payout according to the index structure, but we have the hybrid solution, the hybrid contract in place, the farmer still will get the payment. And right now, these solutions already being discussed in many countries, including Grenada and Guyana, where the hazard of tropical hurricanes is very high. And this is something that we can adopt. So next slide, please. And thank you so much. I hope it was interesting. If you'll have any questions, I will be able to tell you. So just ask it in the chat, and I'm here still. Thank you.
Thank you so much, Roman. A very, very comprehensive, taking us around the world with these interesting experiences and lessons. Next up, I will invite Amos Tabalia, who is the Chief Impact Officer at ACRE Africa, to give us more from his experience. He brings over 13 years of experience on agriculture, climate, and environmental industries, so quite a breadth of experience. And over the past 7 years, he has been leading ACRE Africa's impact department, oversees digital technology, impact advisory innovation. Over to you, Amos.
Thank you, Kelile. Really excited for this session, and happy to be presenting to the attendance. Today, we are looking at the new innovations, technologies that are, in relation to digital, financial, climate risk, and in agriculture. So I'm really excited to share with you some of the things that we've been working in at ACRE. We identify ourselves as an insurtech, sort of a financial tech organization, and we try out, cutting edge technologies. And we don't just do this for fun, but we do this because, there's need. We find that these, innovations can play a major role in terms of scaling up some of these solutions. So for today, my presentation will look at one of these very interesting solutions, and that is the use of blockchain and mobile phones to scale uptake of agricultural insurance. Specifically, I will look at our experience in Kenya, and to some extent, what we are trying to advance in Tanzania, and eventually we hope that this can roll out to different countries. Next slide. Yes, so just to give an overview again, I think previous speakers, and I think in many sessions you see these statistics. We talk about the main challenges that we face in terms of uptake of agriculture insurance. But the case itself, and I'm just quoting a bit of an older, document from 2018. Sub-Saharan Africa, still underserved in terms of access to insurance, especially when it comes to smallholder farmer. This is way back from 2018, whereby less than 3% of the market was served. But still, we haven't made a lot of progress since then, and it's still been a bit slow. Of course, new technologies are coming in, so it's slowly improving, but still a lot of things need to be done to increase that uptake. For example, only from that time, out of the countries that were researched, I think we had only 3 countries, that is Kenya, Nigeria, and Zambia, which had a market penetration of more than 1%. And considering that these countries were actually running, large-scale national agriculture insurance, schemes, which were, had a lot of subsidy, and still this was less than 3%, who were 3% of the smallholder farmers or, producers who are accessing agriculture insurance. It means that there's a lot of things which need to be done. It's not just about, the subsidy, but, there's quite a lot of ground to be covered. And so, there's an availability of up to 14 billion in terms of agri-insured value. But still, 3% is less, the whole 97%. And the idea is to try as much as possible to increase, this uptake because of the importance of what agriculture insurance, plays in terms of, protecting farmers and, crowding in, other kind of, resources or investments by farmers. Next slide, please. Yes, so additionally, apart from the, the low numbers in terms of agricultural insurance uptake, there's still the issue of climate change, that variability and the vulnerability that climate change, brings in terms of crops is a huge issue. And it is posing, a significant threat towards, food security across many countries. It leads to other issues, socially, economically, and that becomes a very huge problem. And so one of the solutions, theoretically basically that has been proposed is to offer, climate resilient, solutions, or solutions which promote resilience of farmers against, these challenges. And one of these is an affordable index insurance product. Because of the advantages of parametric insurance solutions, there is, it's theorized that, these insurance products can easily scale. They can have high impact, both at community level and at, individual household level. However, empirical evidence shows that, adoption of this is still lagging behind. And mainly the evidence, from research shows that this is due to affordability, transparency, delays, and all this leads to, lack of trust from farmers. So there's so many other reasons. I know previous speakers have alluded to some of them, but when we look at, issues to do with, payouts, long delays, these play a major role in terms of, how farmers will trust these products. But it's not just farmers. Even on the supply side, when there's delays, either in terms of collection of data or, all that, creating that portfolio, it really affects, the trust in that product. So ECA, together with other partners, and the key partner for us is Iterisic, which is a technology developer, looked at methods on how to boost the efficiency of these insurance products. So we said, okay, first of all, there are a lot of innovations which need to be done around the insurance products themselves, the rating process, the type of data sets that you need. But then we also looked at the kind of infrastructure that we need to build, which became very important in terms of, addressing issues to do with delays, payouts, and, just improving trust of these products. So that became quite important for us. And this, whatever I'm going to talk about today, is basically trying to address issues of, that have been identified in literature and evidence before. And so the technology that, came up was blockchain, and Iterisic had worked on this for some time. This is something that had been worked on over, the last 5 years. And it looked like it had potential to address some of these issues. The whole idea in a nutshell was basically to digitize weather data that we used in our actual garage, and have digital insurance policies, digitize insurance policies, or what we call smart contracts, and then to see if we can provide further, faster and cheaper types of policies. And that is basically what you're going to talk about today. Next slide. Great. So what is blockchain, first of all? So I know I've said a lot of things, and the one thing is basically to define what is blockchain. This is a question which everyone tries to understand, and just to provide a very high level overview, high level kind of answer is that, this is a sort of distributed digital ledger, or a decentralized sort of ledger, and it is used to record transaction, to synchronize transaction, or to share transaction information across multiple computers. And the main principles behind blockchain technologies, transparency, security. It's not easy to be changed, and that decentralization. So it's built on in terms of in blocks which are linked through different chains, and these blocks contain different sets of transactions, but they are linked through by these chains, which means that you can add on this chain, and it's very hard for these blocks to be altered, or the information in those blocks becomes very hard to be altered, because again it employs the use of cryptographic methodologies to ensure that the data is secure. So whatever this kind of infrastructure, what it does is that combined with parametric insurance, it brings in the whole concept of smart contracts, interoperability. It provides the abilities to quickly scale. It improves privacy, and also it becomes quite sustainable to have this sort of of policies. why we chose this kind of technology for us as a risk, designer, is that we could be able to reduce our cost. Eventually we could be able to have, extremely, cheaper sorts of cheaper forms of, products, less costly. We could also improve our risk assessment because of the type of data, the quickness in which we could be able to access this data due to the infrastructure. We could also ensure that, we reduce issues to do with fraud. So we increase, the integrity of the data that is, across the whole value chain. Of course, there's cost efficiency, there's transparency and trust, which is very key for us and for a lot of insurance solutions. At the same time, there's, the ability to enable, quicker and more efficient data collection and analysis, and, to engage farmers at the same time. Next slide. Yes, so just to give you an idea of the whole setup that was implemented, is that on one hand, we had Ithrisk, and which is basically a technology player, and they designed the technological platform. They also created the user interfaces, the APIs and the tools that will interact from from the technology platform to the actuarial garage or the actuarial engine for rating processes, and then they also provided the ability to integrate with other providers, now the satellite data. Eka, on the other hand, we played our main role was in relation to the actuarial process, the rating itself, setting triggers and coming up with what we call the definitions of the product. The other roles included, project management, customer acquisition, the policy maintenance, bringing on board the other players in the insurance value chain. And again, the other main role that now we played was, the distribution element, where we had other partners, including, Masico, in terms of, how do we get that product to the end user. Of course, we have other partners that includes, Safaricom or telco companies to enable, the payment gateways that would be able to collect and also to send or receive the payouts. So to collect premiums and send and receive payouts. So that is the general overview of the operational setup. Of course, there are many other partners I've not mentioned here. There are ministries, there are regulators, because that really is important to mention the regulators. It's also important to mention the role of insurance companies, because this setup had to make sense to insurance companies, and I'll probably allude to that later on in the other slides. Next slide. Great. So I've explained the whole setup. I've explained why you were doing this, or why you wanted to do this, or why you wanted to address these. The key things is just to show how we did this. And for us to understand this, from
Amos?
purchases is able to access.
Your signal is it's struggling.
Okay. Is it?
But now we can
is
hear
it
you. Please
still
go
worse?
ahead.
Or...
Now it's better.
Okay, sorry for that.
Yeah.
Okay, sorry for that. Yeah. So the main challenge, the one key component is how these products can interface with the end user, and that meant that you needed to find a solution around that. Of course, we had been doing this before. What we came up with is a serialized scratch card, just like the old scratch cards that you would use for either purchasing airtime for your phone, or I don't know, for cards, or for whichever sort of card. But basically, this is a card which has a serial code, which is back in our database. But then whenever a farmer pays for insurance, he's able to receive this card. He scratches this card, and then he activates this card by, simply either dialing using a USSD code. Using a USSD code, he's able to access a menu and he can be able to activate the card. Or he could also easily, use a mobile phone app and be able to, input this card and, this will be activated. For us to be able to distribute, we put these cards either in input bags, which became our interest, our insurable interest. So if it will be an input bag for maize or for fertilizer, we'll put this card inside the bag, and during when the farmer wants to plant, he'll open the bag and be able to access the card and then activate it. Or in other situations, we had what we call champion farmers, and these are basically our agents who come from specific areas, and they work with between 100 to 200 farmers, and they could be able to to sell these cards to those farmers, and then the farmers will be able to activate those cards. Next slide. Great. So just to continue on that operational setup is just to explain the architecture that was that we implement in terms of our our blockchain solution. So on one hand, we do have an actuarial garage, and this basically provides what we call the pricing table, so the definitions of the product. On the other hand, we have the satellite data, which basically will be brought into this our rating process, or where we have we'll create the actual product, and now this product is what we put on a smart policy, or what is the blockchain policy, the blockchain-based policy. And we have also a contract review engine, because our parametric product has a review on a bi-weekly basis. So every 2 weeks, the triggers that have been set are reviewed, and then payouts or no payouts are decided immediately. And this still connects to the the client-facing side, which when the product is available, as I said, allows us to be able to collect premiums using a payment gateway. And then on the other hand, we have a payout schedule, which allows farmers to receive payments. The schedule is generated based on the reviews from the contract review engine, and when that is done, the farmer will automatically receive a payout, and if this is clearly goes through the whole chain and it's approved, then this is automatic, so there's no other interaction in between. But farmers always will get a notification anytime a payout or a trigger is realized. They will get a notification. So this works seamlessly with zero interruption from interruption from any person, because it it runs independently remotely from any other interaction. So no kind of interaction between an insurer or a reviewer with the data, because the data again comes in automatically. Next slide. So again, I'll go back to the card. So as soon as the farmer, for us to access information for both, rating, as soon as the farmer activates the card, I hope you remember the slide with the cards. So as soon as the farmer activates the card, what happens is that this is received at our backend, and what happens is that we are able to clearly, visually, we can visually see where the farmer is coming from. We do have pixels of each location in the region the regions that we are working. This allows us to be able to immediately receive that information and be able to see it from the specific pixel. We can zoom in. Next slide. Yes. So then in this slide we highlight the ability to to have a very clear location, those pixels are also uniquely identified, and that when we get that information from the farmer, we are able to see that on our end at the back end immediately. Next slide. So after the activations, whenever a farmer activates these, what happens is that we are able to, to get information. This information, most of it in the public ledger that, the blockchain public ledger, this information is protected. So you only see, a sort of a code. But behind that information on our end, or whoever the stakeholder is, we are able to collect data on time or date. We are able to collect exact location. We are able to know the order number. We are able to know the activation code. We know the premium amount. We know the actual pixel. We are able to validate the card itself. Next slide. And this information, this is just part of the information that we are able to get as soon as the farmer is able to activate the card. Next slide. Great. So we can do this for individual farmers, but we can also do this for groups of group policies. And this just gives you an example of a group policy, which shows all the different characteristics of the policy, and this has been inbuilt into the the contract management system of the policy. So we collect data on the beginning, the end of the season, or the period for the insurable period. We have the actual amount that has been paid and the actual sum insured. And then we are also able to know how many policies are under that specific group. So what you see on hash policy is basically how many policies are written under that group. So you can see one group has one policy, another has 10, another 63. And when you click it, you get more information. Next slide. When you click a policy, be it group or individual, you're able to see more information about that. You have the clear the information on start and end of the cover, but you also get information about the hurdle or the deductible. You get the sum insured, all the information that you need to manage your contract. Next slide. The other thing you're able to interact with is that you're able to see the different stages of that are being monitored for our parametric insurance, which is we monitor 4 main stages, that is germination, vegetative, flowering, and pre-harvest. We do get or maturation. We do have we look at different things. So to monitor those individual, you're able to see them. You're able to see them in real time. Next slide, if you can be able to hear me. Next slide. Yes. So at the end of the season or during any stage, you are able to also you also are able to see the different triggers and how they have triggered and how much they have triggered, and the actual payout. So let me say if you have a seasonal cover and at germination period you have a loss of up to 15%, then you will be able to that will be activated and you'll receive a payout immediately based on the full seasonal cover. If it is a total payout, then the cover will pay out fully and then it will exit. And this is done without any interruption, which allowed us to basically do mid-season kind of payouts, end of season, or at each stage you could be able to do payouts, and that is one of the interesting abilities of the product. Next slide. Yes, so that was just how this worked and how what it entails. But one of the key things is just to understand the progress that we've made and the kind of benefits that we've seen since 2018 when this started way back with the technical partners and research partners. Between 2021, when we rolled this out in Kenya, we initially we had 17,000 farmers. The short rain season, which is a smaller season for us, we had 12,000 policies, but this was much better compared to the other products that we had. In the long rain season in 2022, there was an increase in terms of policies. And this was basically because we actually retained more farmers compared to previous years when we were not running, we're not having our product on this. So the products we use this tool or this technology, we could be able to easily, have retention. Like we started measuring retention rates, which have increased. In 2022 short rain, we actually now pushed this to Tanzania, to both Kenya and Tanzania. And we are seeing that growth. We are already now trying to run the same for the second season in Tanzania and for the, I think, for the fourth season in Kenya. That just gives you an idea of the journey. Key gains for us has been, we've reduced the time between payments. Farmers are benefiting from that. We've reduced this to basically 24 hours in some cases, from, as much as 45 or 60 days, because this is automatic. And we think that, this could get to a point whereby as soon as, the triggers are done, the payout is done immediately to the farmer. There are other gains in relation to, the retention, which I've talked about, which is quite important, and also just the price of the product because of the cheaper cost in terms of, the whole product, design. Next slide. The key lessons for us is that one of the key things that has driven that, the growth of blockchain amongst our clients, both portfolio level clients or individual clients, is the ability, especially for portfolio clients who are, for example, insurance companies or aggregators, is the security that this solution offers, accessibility, and also the cost effectiveness of it. We still think the main constraint has always been the initial costs, which is one of the biggest challenges. The regulatory environment is quite complex, considering that each country has its own regulatory environment. But you're not just talking about the insurance regulator, but you're also talking about the regulator in terms of data protection and data privacy, which becomes complex. But then they've supported us a lot, especially in Kenya and Tanzania, where we are rolling out these started rolling out these, given us the ability to trial out these, and we hope that this can become mainstream. There's of course other issues to do with skills gap, resistance to change, issues to issues to do with adoption. Basically just a new technology sometimes is very hard to be adopted. There's a lot of issues around that. Next slide. And next slide. Yeah. So I've already, of course, I've talked about the key challenges, issues to do with data privacy, the scalability, but remember also, these issues are key that we need to, to look at. The last, my last slide was, in summary, I'll just talk about, the role of public and, development partners, because that has been key for us to enable that environment or to be able to take that product. We were supported with Mexico in terms of, distribution, doing the, the last mile approach, which was really, really important. And that I think is quite important, the developmental partners to support that. The regulatory, organizations have been key in us being able to, to do this and trial it out. And we think that is really, really important for, governments and, other organizations to be able to support either incentivizing in certain ways as some of these, technologies. Generally, I think collaborative initiatives, data sharing, and knowledge exchange between public and private organization is really key in ensuring that you're able to roll out these technologies or these high risk, high rewarding kind of technologies. Generally, in relation to the future of this technology, for us, we look at it to be, it can be applied in a lot of things. It could be used for verification, for enabling other issues around, farmer, impact and that kind of thing. Yeah, so that's just an overview of these tools that we've worked on, and I'm excited that I've had the chance to share with you our progress so far. Thank you so much, and yeah, great talking to all of you. Thank you. Back to you, Kelly.
Thank you so much, Amos. Really, really interesting experience, and how the various pieces come together, various stakeholders pitched in, and how this was delivered through smart contracts. I want to apologize to the audience that we are really running short on time. We just have 5 minutes left. And so perhaps I'll take just one question for Amos and one for Roman, and ask you guys to really be succinct in your responses. There's a lot of interest in regulation. So for Amos, the question was, how are smart contracts regulated, or what is the impact of regulation on blockchain processes and smart contract solutions? How are farmer disputes settled? So that's for you, Amos. And then for Roman, again, there were lots of questions interested in how regulators can play a part in scaling up the solutions, but perhaps one that's more relevant is how do you implement agricultural insurance in low data environments? I think you've touched a little bit on it, but if you can wrap it up in one response. And while Roman and Amos prepare, please do join our community of practice, scan the barcodes that are shown here to immediately lead you to the page where you can sign up. So let me invite Roman maybe to go first, and then Amos to respond before we close it up.
Okay, so as for the data, I don't see any problem here. In insurance, we have the ways how we can do the premium rate calculation and risk profiling and do the product design, even when we don't have much of data. Any data is good, but we also can use the analogy, we can do the comparative analysis, and we can apply insurance solutions from other jurisdictions, and I don't see it as the problem as well. Plus, at the present time, we have at least 15 years of weather data for any location in the world. We can use it even if the ground-based weather infrastructure is not good in any country. And just recently, we've been dealing with this in Kazakhstan, Kyrgyzstan, and in India. It's not a problem, really. And for risk assessment, satellite data, it may be still a bit expensive, but there is a lot of free data, especially Sentinel data, and then you can use it without any problems. So it just a matter how do you interpret and use this data. It's not really a cost of data, and it's not the data availability. As for the regulators, I don't see any big help from the regulators, because let's remember, insurance companies, they're professional risk managers, and their major business is to sell insurance. They are risk managers. We can't expect insurance companies to do the weather forecast, to do the educational activities, or to expect insurance regulators to push insurance companies to implement new technologies. Insurance regulators' basic responsibility is to assure the soundness of insurance sector and good quality of services to any customer. And when we talk about the farmers, this is the work of the regulator to assure that any insurance company, any insurance product, indemnity, hybrid, weather-based, blockchain, they need to be customer-focused, and they need to provide valuable services to the customer. Unfortunately, we cannot expect that insurance regulators will help to implement new technologies faster. It's not their business. It's more the government, it's more the insurance companies themselves, it's more the demand and drive to be more efficient within the insurance community.
Thank you so much, Roman. Amos, over to you on regulatory impact on blockchain.
Yeah, I think for blockchain because they are even the mainstream, whatever we understand blockchain from a mainstream perspective, still undergoes a lot of challenges around regulation. We don't have, clear bodies to do that. So for us, what we did is because, for example, the Kenyan regulator supported us through the, what we have like a sort of, competition or, a sort of solution to support our, growth of these products. So the regulator was part of this. So to understand these, the training was also done to the regulator, but also to insurers, and that was really good, and they participated in the whole process. So that is one of the key things which allowed them to give us that ability to do that. Part of our product is that when we provide this product, it has very clear contacts and information to the farmers and the end users on how they can contact the regulator. At the end of the day, the regulator is able to either receive complaints or to be able to react to our solution in case they are raised by farmers. That is part of it, but of course there are a few other things that I will go into details, but because of time, I think I'll be happy to address that question probably through email. I hope my email is shared. Thank you.
Thank you so much, Amos. Yes, we can commit to following up on some of the questions in writing, and then we'll post this on the website as well. Thank you so much for joining this webinar and participating. Look out for our post-event email with these resources. And indeed, overall, the message is tech solutions are indeed essential, but not the only required intervention in order to scale up these solutions. There's a lot of other work needed involving a range of partners. As we saw from experience here, we see gaps still in the technology in terms of reporting, validating, interpretation of data, gaps in the human resources to be able to do that. And of course, a strong role to play for the development sector and the public sector. Thank you all. Enjoy the rest of your day wherever you are. Goodbye.